Hello and welcome to the look ahead for Wednesday, the 30th of October, with me, Fiona Sincotta, Senior Market Analyst at City Index. And it's a big day tomorrow. There is a lot going on overnight. We've got the Australian inflation figures in the European session. We've got the UK budget. We also have Eurozone Q3 GDP as well as German Q3 GDP and CPI. Also have US ADP payrolls and Q3 GDP. And then in the earnings calendar, there's Microsoft, Meta, Eli Lilly, GSK, and Standard Chartered in the UK. So let's just kick off with the UK budget and what to expect. Fairly challenging position for the Labour Chancellor Rachel Reeves, where she's looking to increase public spending whilst boosting growth at the same time, delivering fiscal stability and not unnerving the markets. Obviously, the Liz Truss disaster of just 2 years ago, which sent the pound tumbling against the US dollar, is still pretty fresh in most people's minds. So with that in mind, we do know that a planned increase in taxes that could come in several formats. For example, increased national insurance paid by the employer. Also, capital gains, inheritance tax have also been earmarked as potential ways to increase tax. Generally speaking, increasing taxes often goes hand in hand with the more disinflationary or deflationary process. So that could help the Bank of England cut interest rates, in which case we may see that the pound struggles to move much higher. Let's just pull up the chart here for the pound US dollar. And also we need to just be aware as well that obviously there will be increased borrowing by the Chancellor. This could be through increased debt issuance, again with care not to unnerve the market. Which I don't think, as I said, she will be doing. She's also going to be looking to put measures in place to boost growth. However, these measures are likely to take a longer period, or take a look over a longer period of time, which is why we might find that sort of concerns over rate cuts are pushing the pound lower rather than anything else. So here's the pound US dollar. We do also have US data due tomorrow. We do have the US ADP payrolls as well as the GDP data. So we just had the data from jobs openings today, which actually showed slight weakening in job openings. So if we do see that again in the ADP payrolls, a slight weakening. In fact, we're expected to see a weakening, but if we see weaker than expected job creation in the private sector, that could actually pull the US dollar lower. But as I said, let's just focusing on the UK budget in the morning. Weaker concerns over sort of, deflationary pressures could pull the pound lower. It's still trading below that Q130 level. It's been pretty much in a sideways movement in caution ahead of tomorrow's budget. But if we do see, as I said, the levels we're watching on the downside is going to be 129. That's the low that we've seen in October. If we take out 129, that's going to expose the 200 SMA, which is in at 128, just over 128. On the upside, if the market is pleasantly surprised by the growth prospects for the UK following the budget, then we could see the pound push higher. If we get above 130, the next level on the upside is going to be 131. That was the mid-October high, ahead of the 50 SMA around the 130, 135 level. I'm just going to pull up the FTSE. Again, I don't expect the FTSE 100 to be massively impacted because it is such an international index. But there are certain areas of the FTSE which could be impacted. For example, the housing sector. If we see more support for housing, then we could find that sector could perform well. If we find discretionary spending sort of is not affected, or the market expects discretionary spending to hold up, then we could find that the retailers do well. Alternatively, if there is an increased tax burden on the UK public, then that could see discretionary spending come down, which could affect services and also retailers. So there obviously, and then there are also things about such as the online gambling stocks, which could be affected if there are tighter regulations or higher tax burdens for them. Just as far as the downside, we're actually testing just around the 82 level today after quite a sharp fall. But on the downside, we can see that FTSE has actually been trading in this relatively consolidation, sort of a familiar pattern for quite some time now, right back till June, May. We've had this consolidation pattern. It's pretty much been capped by 83.25 on the outside and around on the downside the 81.50. So that's the levels we watch on the downside, 81.50. If we get some concerns and nerves about the state of the budget, I think the FTSE 250 may be more impacted than the FTSE 100. Next one that we're just going to talk about here is Meta. Meta is releasing its numbers tomorrow after the close. Meta's up 66% so far this year. So there is actually quite a lot of strong performance that's already been priced in. Now, we did see a strong increase in Meta's results last year. Basically, we saw a strong increase in Meta's share price after the previous quarter results. And that was basically because we're starting to see that this big investment in AI is starting to be optimized to bring in more revenue streams. And that is helping Meta. That's what the market's going to be looking out for further today. Just a few stats on Meta. They have beat earnings for 7 quarters in a row. The last time they missed on earnings was done 4 times over the past 5 years. They are basically the best performing Magnificent Seven share price. So best performing share price of the Magnificent Seven so far this year, as I said, up 66%. Expectations of EPS of $5.20, and that's on revenue of 40.25 billion, which is an 18% increase. A lot of attention will be on AI and what that could be doing and what that is doing after such an investment in AI. As far as what we'll be watching out for, I mean, it's pretty much trading at its all-time high, just off it. Going to be looking for a break above that 602 to $600 to reach fresh all-time highs. Pushing it up to 650 would be the next logical level. On the downside, watch this level here around the 550. That was the high that we saw in August and also in July. So if we get a break below there, I think that just negates the near-term uptrend that we've been seeing. Just going to have a quick look at the S&P whilst we're talking about US earnings. Obviously, this is a big week. We're still pretty much stuck in this consolidation pattern as we've got earnings coming in, but we've also got a lot of data in this week. We've also got the US elections. So there's a little bit of uncertainty and nerves, I think, just keeping the upside in check. What do we watch on the upside? 58.82 is the all-time high. So a rise above that could lead to fresh all-time highs. Just quickly now, let's talk about Euro US dollar, because as I said, we've got German inflation. We've also got Eurozone GDP data. There are concerns, as we know, about Eurozone growth. There are also, we've seen that inflation in the region, particularly in Germany, has been much cooler. It's well below the 2% target from the ECB. So, cooling inflation, slowing growth is going to support the view that the ECB could cut rates more aggressively. That could have a negative impact on the euro, especially if we see a bit more of strength in the US jobs data, or if we get more of that Trump trade effect coming through, which is supporting the dollar as well. As far as levels to be watching on the downside, the low of this week is at around the 107.60 level. That's going to be the level on the downside sellers will want to take out. We've had a little bit of consolidation around here, which has brought the RSI out of oversold territory. But if we get a break below that 107.60. Look for 107 on the downside as the next line in the stand ahead of 106.60. On the upside, any recovery is going to be looking for a rise above the 200 SMA at 108.70. So, I mean, we have covered just what feels like a little bit of what will be going on tomorrow. I hope you've enjoyed it. If you have, please do give the video a like. And for more videos like this, please do subscribe.